Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, July 1st, 2026. So as we kick off the first trading day of the month, I wanted to do a video, and as I've been doing lately and will continue to do going forward, personally, I love these AI summaries, and I'm starting to get a little more efficient at doing it. It's still a little bit of a cumbersome manual process. I won't get into too many details, but I have to use one AI model to generate an immediate transcript. Then I can get the AI summaries out to you along with the initial post, whereas before I was waiting for YouTube to generate the transcript because it needs that to really get granular and get down to the timestamps and all that. So over time, these will get more efficient, and I'll also work on doing, like I said, periodic updates, maybe weekly, like I did this one. I told you at first it was a weekly, and then I realized I plugged in by error. I told it to go back to the 15th, so it came out. So I just whatever, it was 2 weeks of summary. Anywho, and I find these useful for myself too to reference. Believe me, I'm doing the same. I'm using the majority, not all. I take a lot of the trade ideas I post. Sometimes I provide chart opinions and people want something else. I may or not take that. I get a lot of ideas from you guys, so keep those coming. And at the end of the day, the sheer number of trade ideas posted, I think there was in 2 weeks, the AI summary kicked out. I think it was just over 100 different individual securities. So that's what I do. And it's been quiet this week, guys. 4th of July. I made a comment the other day. Somebody asked a question, and I'm going to start here with comments, and we're going to dive into the charts. I'll tell you what order we're going to go through as well. What did somebody say? Okay, so somebody asked about the QQQ, and here's my reply, and I just wanted to share this. This is, again, from decades of experience, and I wouldn't read too much into any breakouts or breakdowns in the market this week, as from my experience over the years and decades, this abbreviated holiday trading week is often plagued with whipsaws due to a lot of traders and investors, both retails and pros, being on vacation. That leads to lower trading volumes. That leads to increased volatility, which leads to a higher chance of breakouts failing, false failed breakout, or a stop if you have tight stops being run only to see the stock go back up. But bottom line is, look, if the Qs can solidly punch through and hold above that gap, we're going to get to that in just 1 second. That's on the 60-minute chart, the gap resistance we just hit yesterday. It would increase the odds of new highs in the Qs. So at this time, and preferably next week, really, because, again, take everything you see this week with a little bit of a grain of salt. Due to Friday being closed. Even though the 4th is on Saturday, the markets are closed Friday in observance of it. So my preference is to wait for either a solid break above down below the recent lows in QQQ, which I've been highlighting since last Wednesday. That was the 705 level. That's the best bet. That's your highest probability short entry. Or wait for the next objective short entry. However, the chart set up should QQQ take out the previous highs. So at this point, look, nothing will surprise me. Markets are holding in there. We have sell signals in the semis. We have a sell signal in QQQ that's still in play, but we're getting a lot of sector rotation. And again, the reason you saw that 100 plus summary of just the last 2 weeks, and it's probably not all inclusive. I didn't do a thorough vet of it. I just let the AI engine run. Found a way to let it, access. It's, again, a lot of moving parts to doing this because it's a premium. All the content on the site's locked for subscribers. So for AI to parse it, there's several steps I have to do, and at one point that may get automated. So it picked out all those symbols. But where I'm going with that is the key right now, in my opinion. Again, with my style, everybody's different, guys. Everybody has their own trading style, but as I've mentioned to somebody recently, the stock market's really gone nowhere now for the last couple months. Both the S&P 500, you turn off all the lines. Here's where we're at today. You can see a box here. You can see today we're trading where we were. My pop-up box on the left shows you about 2 months ago. And really, if you box it in like this, here's the market. And QQQ is very similar. I'll go to QQQ in a second. this is where we entered this trading range we've been in back here. And that was all the way back in the end of April. So we're already at, into July now. And so my point is there's money to be made in the stock market. It's just not from the stock market. Now, if you're an active trader, sure, I get out 60-minute charts. You can try to game those levels, as I've been saying for weeks now. And I always say over the years, traders just love gaps. Gaps are a play day, playground for traders. I'm going to highlighting them here. You had a gap right here, so that's the top of the gap resistance. When QQQ hit that level, that's where they sold it. As I often say, gaps once entered, again, that was a gap. Once they entered it, they backfilled it. Then you had a new gap right here. Where did we stop on that correction? Exactly on the bottom of the, well, at least the body of the candle. That's where we closed that 60-minute candle, right on the bottom of that gap. Then we bounced. Then we took it out, so the gap was backfilled, or this right here. And then you gap down below it. And there's a new gap right there. So, and that was bearish. Now, here's where we stopped the other day, back up to this resistance level that I already had on the line. I created that 748.49 levels you can see on the pop-up box all the way back on June 3rd. So a month ago is where I started identifying that as a resistance level. So far, that's where the S&P has stopped. You got a little near-term uptrend line and in which to trigger the next sell signal. And then QQQ, again, I'm not going to spend too much time on the markets. I'm going to spend time on the other stuff because that's where at least my money's coming from right now. It's not, the swing trade on QQQ. We're profitable, but not by a lot. It's like, it's like watching paint dry. There was our sell signal. That was the primary trend line breaks off the June 3rd lows for anyone. I'm sorry, my bad. March 30th low, very key pivotal low. That was when the first target was hit on the previous QQQ short on the daily chart. Remember, I trade multiple time frames, and I will give, depending on what I'm seeing in the chart, sometimes I'll use a 60-minute chart like we've been doing lately for the swing trade. Because at this point in time, I'm only looking for a pullback that will come back to test the 200s in the top of the recent trading ranges. That's assuming my fourth and final targets hit. These were, so when we broke down, you had the targets in advance. 1, 2, 3, 4. We hit the top of that first target zone. We bounced. And since then, the traders have been playing a game of ping pong with gaps. There was a gap right there. What happened when we fell back down into it? We entered a gap. And as often is the case, especially when technical analysis is shining and working well and fundamentals are kind of all over the place, this is where traders tend to, even, some institutional traders will flock to that. And I always say it's both man and machine alike buying. What I mean by that is algorithmic trading programs, program trades will step in and buy at very obvious support levels, which are gap backfills. And they'll short once a gap is entered. So when the gap was entered, you fell. Then that set up at that reaction at the bottom of the gap, again, this gap right here, set up this trend line. Then that trend line was taken out. As I talked about in the futures, you wouldn't have missed that big drop down. That's where a futures trader would have got a jump early on, or QQQ in the pre-market session. But it was also, you can see, we had then put a gap right there. That's a big gap. And that is the top of the gap resistance to kind of bring us back to where we were. And remember, these were all levels identified in advance. That 705.19 level I've had on here since June 5th. That's a month ago. So that was all the way back here where I identified 705.19 as support. If I had moved the line, it would tell you. I haven't touched it since then. And that's the support level. 1, 2, 3, 4 consecutive 60-minute candle stops there. A fifth there. That's just an intra-period break with a print back above it, the body, the fat part close. Perfect close on it there. Perfect test of it there. So as I said in the last couple updates, those 60-minute charts I've gotten out to in the last few days, this was that backfill of the gap. Once entered, as I said up here, I gave you it would be an objective short at the bottom of the gap, but I said if they entered it, and that was that alternative scenario. As I said, always my shaded lighter color arrows with dots are always the alternative scenario, but I don't play the game that the market's either going to go up or down. That's a given. Any idiot can tell you that. You don't need, you don't need to especially pay for analysis from them to tell you, oh, well, stock market may go up, may go down. That's just a given, right? So on any given day, when I give you my arrows, I'm going to be wrong. I'm going to be wrong a lot. So it's just a given that might not play out. However, if I give you alternative scenarios, it's not going to be, oh, we're going to go up another 20, 30% in the market, or we're going to go down 20, 30. That's useless analysis. Both arrows showed it was just a matter of, like I said, just getting very precise. Whether we would turn down at the bottom of the gap, that resistance there at about 725.64, or punch up a little bit higher, which is relatively nothing, really. It's about a 1.5% pop to hit the next resistance level, which was the top of the gap. And that was where I give you the last objective shorting entry. Here, let me bring in that chart. Again, I'm doing this just kind of show you how things are playing out, so you can kind of get a feel, for what kind of market we're in right now. We're in a, an active traders market. I mean, there's opportunities to be made. These little 1, 2, 3% swings. If you trade on leverage and you trade futures, which are inherently very leveraged, I don't have to tell you that. You know that if you trade futures. 1, 2% on a few contracts, even a single contract to NQ is going to put $1,000 or more in your pocket. So you can game the little squiggles. Sometimes easier said than done. And most importantly, if it's not your wheelhouse, your skill set, don't try it. A market like this will eat you alive. If you're, have a trading plan. If your trading plan is to swing down to T4, well, and you shorted there, and you didn't cover at T1, then your stop should be based on a reasonable risk-reward ratio, a favorable risk-reward, at least 2 to 1. That's usually a minimum RR for me. I like 3 to 1 or better. It depends on the whole trade. So then your stop will be commensurate with your entry point or entry points. And I've said this often. That's one reason there's no performance statistics listed on the site. Whether it's a stock market or one of these ETFs like the QQQ or SPY or IWM, or an individual stock, I list multiple objective entry points. Some people may have passed on an initial trade and then want to get in it. Some may have taken profits on T1, reverse, game the bounce. And so each and every day, I'm going to come in, I'm going to tell you where the resistance and support levels are that are likely to produce a reaction. I'm going to show you objective entry points, add-on or re-entry, again, depending on how you're trading. And so that was the last one right there, top of the resistance gap. That's where we entered it, so it got backfilled, and then that was the 30th, yesterday's chart. Let me get rid of that guy, close it out, and that's it. So got rejected there. Now we've backfilled the gap. The gap's already been entered and filled once, but it's still support. Every line on this chart right now is still a support level. Haven't had to really modify much of them. And so from that last update that I just read to you, this is a level that will give the highest probability entry. After all this back and forth, especially this goes back to last Wednesday. There were a lot of successful defenses there. It's such an obvious near-term support level for anybody analyzing on the intraday charts like this that, again, I like to say a blind man can see it. So therefore, it's the more valid the level, the more likely you are to have both stop clusters from long side traders below and short sellers pile in when that's taken out. So again, as I said in yesterday's comment or the day before, that's your highest probability entry, other than yesterday, shorting onto that level. And then, as I said, if it went up, if we popped much above that, then yeah, we were probably going to go to new highs. We're only spitting distance from new highs in the Q, so still can't roll that out. But let me move on. Here's what I'm going to do in this order. That's your update on the equity markets. I'll roll into, I'm going to do a little bit deeper dive. There's kind of some oddities, if you will, irregularities within QQQ. As you know, I often state I'm a very multifaceted trader. I look at, even if I were to only trade the NASDAQ 100, NQs or QQQ, I wouldn't just look at the chart of QQQ and NQ or either one. Let's say I was an ETF trader. I would look at NQ. I like to look at the futures, even though they're going to be roughly the same, but the futures give you, I always use that analogy. I'm a big boater, fisherman. And if you are, especially, down here in sunny Florida, you have to wear polarized glasses. It's a no-brainer, especially if you're fishing shallow water areas, because they cut through the glare on the water. You can see down, depending on the depth and the water clarity, you can see, if it's, murky water, you can see 10, 15, 20 feet down. You can see fish, rocks that you cannot see without polarized glasses. So the analogy I use, it's what you see when you look at the futures. This is NQ, because The only time you're going to get gaps on NQ are generally are on the weekends. You have futures trade 23 hours a day, 6 or almost 6 days a week. They start Sunday evening and they trade all the way through Friday evening with just a 1 hour shutdown period between 5 and 6 Eastern time. So you have, the gaps are going to come on the weekend. Other than that, it's almost continuous trading. And then, so you can see developments like for example, there's that little trend line break that I just mentioned that when QQQ, you gap down that morning. But if you were trading NQ, you got to jump on it if you were, up in pre-market. And that was a nice bearish rising wedge, I believe I pointed out at the time. So this is why we're swinging up and down. We put in a divergent high here. There was our primary sell signal on the break of the March 30th uptrend line. We went down, and then we put in a divergent low, positive, aka bullish divergence at support. Bounce from there, then put in this next divergent high, smaller but nice, clear positive divergence between the momentum indicators and price. You had a little uptrend line, give you a smaller wedge. There was your sell signal. Went down. Then we recently put in a divergent low. So they're ping-ponging it right now. And the bigger picture is this. If you're getting impatient, first of all, you're in the wrong trade. If you don't have patience, the markets aren't going to always move fast. And again, right now I'm only talking on NQ. We're going to get to the other stuff. We're having a field day on because when the markets are doing this, and we did this last year, the last couple of quarters of 2025, I told you I was focused on a diversified, just mixing it up, the best looking longs in various sectors, commodities, ETFs, and the best looking shorts, because it was a stock picker's market. We vastly outperformed because the indexes were kind of deadish money for most of that time. And so again, if you're only trading the markets and you don't have, you're not a very adept, active, short-term nimble trader, day trader, short-term swing traders, then you're going nowhere for months. And if you wait patiently, typically, once you have these type of trading ranges, it's like energy building like a coiled spring. There's a lot of potential energy there. And so an upside break, and I'll speak to that at the time, as I often do, and I'll tell you right now, it might sound like a broken record, but I've said it before back here, that any new high, when you have negative divergence, and if it happens soon, let's say this week or next, you're going to have divergent high. You're going to have divergence all the way from that point as well, just because the posture of the indicators right now. If they keeps going up another 10% plus, that divergence could be burned through. So my point is, yes, a upside break on face value of this trading range would be bullish. That'd be new all-time highs. That's bullish because when a stock or an index breaks to new all-time highs, at that moment, you have zero remorseful holders of the stock or ETF or sector, because it's at all-time highs. Nobody's underwater. So you get a kind of a positive mindset. So generally, historically, that's bullish in investing and trading. However, as I've said repeatedly many times, from my experience, breakouts that occur with overbought conditions and negative divergence have a very high rate of failure, a rate that I would put well above 80%. So therefore, I'm telling you the same thing. Look, trying to game the little near-term stuff on the market, but any new high, unless it just blasts through there and burns through these divergences, by burning through, it means we take out these previous highs right here and here. And then at that point, something else is going on. Keep in mind, this is a hourly chart, 60-minute candles. I'll also look at the daily, but I can tell you right now there'll be similar divergences on the daily. And while a downside break will be quite bearish, because again, there's been a lot of trading in here and it's that energy. And so a downside break should, in my opinion, be the catalyst. And again, the first key level I'd like to see go is about 705 right there. Then this is the whole bottom of the trading range, that T1, that first target zone we hit all the way back here. We've just been ping-ponging around. So that's it. So really not much of an update to give you on the market, but I'm doing what I do. I get very granular, and so I just gave it on the futures. I'm going to give it to you here. There was a little uptrend line on QQQ, which it broke. Holiday trading week. We're at this support level right now. So let's move on. Not much else to add other than, again, should we pop up here and do this or even this, we're just going to extend this divergence if it happens anytime soon, and even bigger divergences that show through on the daily chart. Okay, before I leave the cues, let's go here. Let's toggle on the daily chart. And you can see the divergence is massive on the daily chart of QQQ, by the way. So I was just living in the what I call the world of the 60-minute charts, kind of, and that's where you want to kind of live and move to when you're trading in a trading range. Once we break from that range, maybe I'll have more focus on the daily, but I always watch multiple time frames. And just wanted to point out here that it's not even close. When I look at the daily chart, here's our PPO up top, big divergence, and you can see it's steeping. These are momentum indicators. So you had divergence there. That was our sell signal right there. The break of the March 30th trend line, that was where T1 was hit. It was, again, based on the 60-minute chart. We hit it right at the lows. Bounced, put in, no, we didn't do it yet. This is not technically yet, it's close. It was about equal highs, but we haven't yet taken out or equal that high. But again, anytime soon, because of the posture of these indicators, even a nice lift this high, 4 or 5%, we could rally next week 6-7% in the market, and these divergences aren't at risk of being taken out, at least not at that time. If we go much higher, maybe we'll see. So that's what I wanted to point out. And as I pointed out in the past, you don't have to have a divergent high and then fail it to do that. There's been times, as I've highlighted recently, I'm not going to get in the weeds. I didn't want to spend too much time on the indexes now, but I showed you back in 2022 and I think 2025 where either the S&P 500, SPY, or QQQ put in a high and then failed, made almost but a slightly lower high, so pretty much a double top. And guys, again, for all intents and purposes, you don't have to be so precise whether you make a marginal slight new high or slightly lower. When your indicators are really lagging, that's what it's showing you. The momentum is waning in the markets. That's QQQ, of course, very tech heavy. There's SPY. It's clearly peaked here when we got those sell signals back then on the break of the March 30th trend lines. And it's just been ping-ponging around since. So we hit that. I highlighted that bear flag back there. We hit the measured target almost perfectly, bounced from there, and that's that. So, and again, any new high anytime soon in the S&P 500 too will be a divergent high. So let me show you what I've noticed on QQQ today, which is a regular. QQQ is down 1.5%. And I've shared with you many times the real-time breadth indicator that I came up with years ago using this charting platform. I'm going to move this over. There's my list. These are all the components of the QQQ. That's the NASDAQ 100 ETF. I believe you can see, if you can, I'm going to read it to you. It says 101 components and watch list. That means even though it's the NASDAQ 100, Alphabet has two share classes, GOOGL, Class A, and then the GOOG. All right. I think it's Class C, if I'm not mistaken, but either, it doesn't matter. So that's why you have 101 securities, but it's really 100 companies, right? All right. So I always keep them sorted by market cap. And you can see up here, other than NVIDIA and Broadcom, most of the Mag 8s are up today, so they're catching a bid. I highlighted a couple recently, like Amazon and some others falling back to some level, Microsoft breaking out. So now they're starting to catch up, but this is unusual. Again, let me repeat, we're down 1.5%, and the stocks with the biggest market cap, it's been a very widely known thing. The top 10 stocks alone make up somewhere over, I think, 50% last time I checked, the top 10 holdings. And it got bigger. Oh, the top 8 made about almost 50%. The top 10 definitely were over 50%. And most of them are up today. But what we're seeing is unusual. So what I'm going to do is sort by, to get real-time market breadth, I click by gainers, the percentage up and down. So you can see the stocks that are up. And I'm going to scroll down here. Here's how you do this. You stop the last one positive. These two are flat. It's right here, EA. And that tells me when I click on EA, 62 are green. So the majority are up, yet the NASDAQ 100 is down 1.5%. It's a pretty decent move. Why? And then we flip it around the other way to the losers. This is all chips. Okay, so I've been on chips like white on rice. And yeah, I've called a few tops, and we hit a few initial targets, but never any of the deeper targets yet. I do believe, as I've stated, the chips are a very similar bubble that silver was in, just tech mania, fear of missing out, every analyst and their brother tripping over each other to come out and to just tell you why it's justified, why the earnings are just going to continue and all that. And again, maybe they're going to be right, but the masses usually aren't. And again, at the end of the day, if you always struggle with that, because you say, Randy, well, yeah, they just, Micron or whoever just announced they've got orders they can't even handle and they're booked out. At the end of the day, just ask yourself how much of that's already been priced into these huge moves. Okay, by the time you read about something in the paper or hear it on CNBC or wait for the company's quarterly earnings report to come out, you parse through their 10Q, most, if not all, of that's been priced in. It's been priced in by both legal and illegal, but mostly legal insider trading, meaning the company's insiders, that they're giving you stale dated information. A quarterly earnings report reports the earnings over the last quarter, but it comes out a month after the quarter's over. So you're going back, up to 4 months of sales data and different metrics in the company. And again, the insiders know, the Wall Street insiders that dine with them and vacation with them, the Hamptons, the hedge fund managers, and those in all those circles. So I just want to explain that's why, whether or not the semis there's an end to them, that the end is close or not, that only time will tell. Okay, I just wanted you to understand how I'm going to stay on this trade. And again, for me, it's all about the charts, the technicals. So I made very clear last week on Friday that we had a bearish engulfing candle forming throughout the week. And then on Friday, I told you before my last update, barring some crazy stick save in the close, we were going to get it. We did get it. And that's a sell signal. It was a double sell signal. It was a bearish engulfing candle, which is one type of a sell signal. This is a what we call a topping stick. If it comes after a prolonged uptrend, that's when you want to look for it. And it's one of the easiest and highest risk-reward ratio strategies I know of. And just like I like to look for bullish engulfing candles at the end of a prolonged bear market or downtrend, it's the opposite in reverse. You have a big green candle at the bottom. That wasn't one, but if it was a big green candle, that's what it would look like. And it's the same thing in reverse. And the reason it's such an effective strategy is because you take it. So you would have shorted Friday at the close when you saw it happening, or any time this week, even on this kickback rally. And your stop is just above the top of it, because by definition, if you go above that candle, and if you want to give it a little bit of room, sometimes I'll do an intraday pop. I usually recommend a little bit of room. So you're risking a minuscule amount of downside risk if you're stopped out to the profit potential, because should it prove to be a topping stick, and it may not, only time will tell, then you're going to make a multiple, probably a 10 to 20 to 1 risk reward ratio, meaning you're going to lose 1 unit of loss, whatever that number is, to the downside targets. So in addition, I just wanted to reiterate, which I already have this week, we also printed the first close before that key. That's the same exact March 30 low, primary uptrend line. It was well defined in trend lines. When I'm looking at them, it's the most number of bodies and or the fat parts or the shadows, the skinny parts that touch. And so that was my trend line. And all that matters on a weekly time frame, which is what we were trading here, is how you close a weekly chart. And I didn't have to squint to see if we close below, which we clearly did right there. So that's a sell signal. And if you took it, let's just say for kicks and giggles, you took it at the end of the close on Friday, you have about 11% upside. You must, wow, that's a big stop. No, you beta adjust your position size. You don't put a lot into this. So just looking at this weekly chart, I'd see at least a 35, 36% drop from there. All right. And so that's a very attractive 3-to-1 risk reward ratio. And things get ugly, I could certainly see the potential for more. So that's your update on the semis. Oh, but going back to where I was, I'm sorry, I squirreled a little bit. So sorting the QQQ by the losers, this is what it is, and this is unusual. It's this, it's not mere coincidence. We issued the first sell signal in the semis in a while, and you can see, oh no, that's why this wasn't working. over here, this is what is impacting the NASDAQ 100. Again, very unusual to see the majority of the MAG 8 stocks green, again, because this is a cap weighted index. And yet to see a 1.5 and the majority of total components of the NASDAQ 100 green, yet it's down by quite a bit, 1.3% right now. And that is due to the semis, to that sell signal we got recently. And so I'm trying to not let me. All right, I'll do it from over here. What's going on here? I slid this screen over. I should be able to draw here. Well, there it is. It'll let me draw now. KLAC down 12%. You might not be able to see it. My list, I have the fonts shrunk down good. Yeah, I can see this screen fine from where I'm at, and you're looking at just part of a much bigger monitor. Lam Research down 11. SanDisk 10. These are all the high flyer. AMAT, chip equipment maker, just like KLAC. Remember, KLAC and AMAT are the chip equipment makers. They're kind of the canary in the coal mines, because when they start seeing their orders slow, that's saying the chip industry, the chip companies, they make the equipment that makes the chips. So keep an eye on them. Now, again, one day doesn't make a trend, so let's not make too much about it. I'll rifle through the charts real quick because that makes a difference. Intel. So these are all, you can see it across the board. It's tech. And, you know, if it's not a semi, it's one that's participating in the AI bubble. Western Digital, you got AMD. So these are all down, and this is what's dragging down the market. Again, you look, there's a couple non-semis. There's Comcast in there and Walmart, which I highlighted as a short recently as well. But okay, so that's what's dragging down the market today, especially the tech-heavy NASDAQ 100. And then when we look at those individual names, let's just do this real quick again, because I think there's a lot of potential on a SOXX short. So we have the sell signal on the weekly. On the daily, you know, it's not screamingly bearish yet. We do still have the big negative divergence, right? That's still there in place. That was a divergent high, as was that. We got a shot across the bow. It was a double-digit drop. We really need to take out this 585 level on the ETF. Now let's rifle through the individual components. We'll do it fast. KLAC, again, down big today, but nothing, no technical damage that I see. Just a big down day. There's an uptrend line right there. So if there's follow through next week, if we break this uptrend line, that'll be a start. And the next sell signal or bearish development will be a break below 235 right here. I'm going to round that up 2 pennies. So those are the two levels to watch. If it breaks 235 and has a solid close below it, you're probably going to go down to this target, which I think will hit. And that's, again, this is all my targets are in a roughly calling for about the same thing, give or take, you know, anywhere from about 37 to 50% drop in KLAC. Lam Research, there's an uptrend line that needs to go. Again, it's a down day. No real technical damage today. So I'm not going to, but again, we have a sell signal. Don't get me wrong. What I'm trying to tell you is my convictions aren't super high just because we had a bearish engulfing and a trend line break on that. We start breaking down the majority of these other components that I'm showing you here, then you got a problem. Here, you know what I should do is sort them by market cap, because that's kind of tells the bigger story. There's NVIDIA, just hit its 200s. If you're a long-term bull or NVIDIA bull, if you don't buy on the 200s, when do you buy? So it's there. Taiwan Semi needs to break that trend line there. There's Broadcom. You know, a lot of these stocks have already started moving down. They're testing their 200s in a bull market. Sometimes you'll slightly undercut them, but you can see it was riding up the 200s there. And that's what happens. If it loses the 200s and this price support right here, about 359, that's going to be even more bearish. And you can see there's other things I have on this chart. I have a PPO delineation line at about negative 2.5. A lot of folks, I imagine, just go with the defaults. When you put a PPO or a MACD on your chart, they're going to give you a line called the zero line. And that tends to, there's several ways to use it. Bearish and bullish crossovers above and below the zero line. But to me, I look and it tends to delineate trends in a lot of stocks, but then I modify it. Every stock is different. So I look at it. I always like to use the 9 EMA, which is the signal line on the PPO. It's the last of the two to cross. It moves slower. It's the 9 exponential moving average of the PPO line, the blue line. And so that delineates in a bull market again, I would have, when did I add this line? I did that back in November of 2025. And it shows me that typically when the PPO signal line, the white line, is above this line, you're in a bull trend. You want to be long and strong Broadcom, right? And you buy pullbacks to it. It also acts as support on pullbacks to it here. And you have a primary uptrend line as well. And then when you break it, be careful. Don't buy pullbacks. You're short. And you also took out the 200-day moving averages, and it doesn't look like much, but there was a 45% drop off that divergent high into that low right there. And so for a couple months, we were below there on a sell signal. Then you recovered it there. That was the safe to get back in the water moment right there, right? And guess what? You also recovered the 200-day moving averages right there. So there were two buy signals, both the recovery of that negative 2.2.5, we'll call it, this is 2 point, and a recovery back above the 200s. So that would have flipped you back to long, and the stock from there gained 170%. Now we're testing the line. So I'm going to speak to two people right now. I'm going to speak to those that are bearish, intermediate to longer term, and those that are bullish. Those that are bullish, if you don't buy this, just like you had an opportunity here, 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 when do you buy? These were some of the best buying opportunities out there. And if you don't like that, it's just one indicator. I always say I use many indicators. I'm a very multifaceted trader. There's not any one indicator that is 100% effective. So the more buy signals you can have, you also have this pullback to the 200s. Sometimes you'll undercut them slightly, but you can see as I go back in time. And remember, we lost them here and there was a big drop. And it might not look like much, but once we lost them, stock dropped 28%. Probably would have stopped out just about any long, especially considering it was part of a overall 46% drop, right, from the divergent high. But my point is, and I point this out, this is what I do, guys. I provide analysis. You pull the trigger, you buy what you want to buy, you buy what aligns with your outlook. So I can tell you 110% this is an objective long entry because you're at dual support. Well, you're at the 200-day moving average support. When I turn on all my lines, I have a price support level there at about 359.50 that I've had here since January 15th. It's pretty well defined back here. Quite a few reactions. So you have triple support. You have the PPO as well right there. Now, based on the recent sell signals that I just talked about on SOXX and some of these other individual semis that are triggered, I think sooner or later this we're going to flip this into a sell signal, and you're also going to lose the 200s. So I guess the takeaway, guys, is if you are bullish, you buy now and you put a stop somewhat below. Somewhat is going to depend on your price targets. If you think this stock is going to new highs and beyond, then you're looking for 50+% gain right there, right? And therefore, you can give yourself easily a 10% stop loss. That gives you a better than 5-to-1 RR. And so that you take that trade. Now, if you're bearish, no, there's no rush. It's kind of like the two bulls story, if you guys are familiar with that one. If you're not, look up the one from the movie Colors in the late 80s with Sean Penn and Bobby Duvall. Is probably the best iteration I've heard of that story. You can do the two bulls story, YouTube, they'll show it to you. But wait. And if you get that sell signal there and you get a break of the 200s, that just further adds to the case. Now, would I short Broadcom in a vacuum? No. Make sure we already have the sell signals on SOXX. So the more of these that break down, there's Micron. Micron just broke down today. There's that last update. I think I would have given you this uptrend line I've been watching right here. I had a sell signal on Micron today. I had quite a few alerts go off. A price alert. Nice clean sell signal there. So that's an objective short entry. You can see my price targets all marked, at least down to the 200s. See, on most of these stocks, I'm just calling them back to the 200s. No matter who you are, what stock, what industry, every now and then, the strongest bull markets, you got to come back and periodically visit your 200s, even if the bull market's going to stay intact. When you get the longer you're away from them, and the further you get away from them, the harder the mean reversion is. And there's an indicator. You can, a lot of charting platforms have it. I'll show it to you here. Didn't mean to use Micron, and I'm sure there's some better examples out there, but this one right here shows this line is the percentage trading above its 200-day moving averages. I'm on a daily chart, so I can only go back this far. This is in recent years, this is unseen. This isn't overbought. This is extreme off the charts overbought. I have the same indicator on the weekly. I just have to populate it with a 40 period moving average. It's the same thing. And that's it right here. Percentage above your 40-week simple moving average. And we can go back into the 90s. This is .com era right here, guys. This is the .com bubble popped in March of 2000. So we've never, that's where we got in the .com era. Never has the stock been this overbought until here. And this is just an extension where this is even growing now. So again, the mean reversion, it's going to be, in my opinion, the most beautiful thing out there to trade. Just like the crash we caught in silver, but possibly even more profitable. That happened so quick. I'm going to guess a lot here probably didn't take that sell. I know some did. Actually, we got, because we shorted a couple days earlier with that ACQ or whatever, the leveraged short ETF. But you can see Micron's just breaking down too from the, there's that same uptrend line I just gave you off the March 30th lows. And so here's a weekly chart. Week's not over. Is it abbreviated trading holiday week? Yes. You know, again, take it with a grain of salt, but it doesn't mean that it can't stick. And so for this guy to come and here's my target on it, would be at least to come and test this bull market uptrend line. And I could see some price. There was a trading range right here in this area. So you're talking minimum target based on the weekly chart. I would all, you know, I'll get granular. I'll tell you, probably stop right there first. So this one's going to drop from where we're at about 25% to about the 823 level, probably bounce from there on sympathy with the sector, and then come on, hit the 200s down here. And if it's fast, and it's going to be about a 50% drop. Again, trend lines are dynamic. So are the 200-day moving averages. They're coming at higher levels. So if it's a pretty quick drop, that'd be 50%. All right. So let's move on. Now you can see again a lot of stuff just very oversold, overbought. I'm sorry, I use those words sometimes interchangeably or by mistake, not intentionally. That's AMD. What I see here is a breakdown, a back test. So pretty much the magic number right now on AMD, and you definitely want to see that one go, is a break below about 501. So a set a price alert. 501 was the post breakdown lows. We danced for a few days, back tested. We're below that, and it's also minor price support. And so you can see all my marked levels. And again, here's your 200. So this is a logical final near-term swing target, which if hit is going to mean that the stock has dropped off its recent highs about 45, 46%. All right, I could keep going. Don't want to beat a dead horse, but do want to update the sector and show you that we have quite a few breakdowns in back tests. This is a breakdown of back tests. That puts this one ASML on the sell signal. Intel, told you what I wanted to see. It's hanging in there. There's two things I'm watching. You had this multi-week, multi-month, multi-week trading range right here. Had a breakout. So far, it hasn't really lost the breakout, but it hasn't built on it. It's been in a smaller, locked in a smaller trading range, but it did today. You can see here, let me move my box over. Here, let me just stop the box right here. So we parked on that trend line. By parked on it, there's a little doji candle. So we closed right on it here on Friday. We had a stick save on Monday. That means we went down intraday only to close right back up on or above the line. The green shows me close at the highs. Another close on it, or right above it, tested it. Today we dropped below it and we're still below it. We only have less 45 minutes to go in the trading session. So we're going to have a break of that trend line on Intel. And so if you can start to enter this trading range, the next stop, from my experience, when you have a failed breakout of a well-defined trading range like this, once it fails, the next move is down to and then almost straight through the other side, just like the QQQs did in reverse. We had that multi-month trading range, remember, recently on the daily chart. And we broke down right here. And this one right here, this long-term trading range. We went in this trading range. We had a breakdown that proved to be a whipsaw. Once we recovered, we took back the 200s. It was like Monopoly. Go straight to jail. Do not pass go. Do not collect $200. It just blew up because that was a failed breakout. Very bullish once the 200s were recovered. If you recall, there was the no shorting zone. We shorted on the back test there, but with a plan to not, no more shorts there. And then took a few shots along the way on minor trendline breaks, including this one here. And so that's it. So this would be lines with T4 on the daily, or that 60-minute chart of QQQ is roughly the 636 level, which is the top of this multi-month trading range. And you got it, 200-day moving averages. So that's initial target. So enough on that. Let's move on to, I already showed you what's going on under the hood in the tech heavy QQQ. It's really being led by, being dragged down, that is, by the semis, which is good because that follows our sell signal last week, if you're positioned that way. Crypto. I want to talk crypto for a second. Okay, I've been covering Bitcoin quite a bit lately. We have the short on strategy, and I've been talking about this 58,628 level target. We had sell signal there, back tested and went in the trading range, broke that, went down to that level. Also, these primary, I have two trend lines in close proximity. And so we bounced there as expected, back tested both the overhead resistance level. It was a former support / target level right there. And we're there. We still have the positive AK bullish divergence. Again, I'm working on a working theory that this is probably it, the beginning of the end for strategy. I think that Ponzi scheme has built up long enough. Maybe I'm wrong. Maybe it's going to, pull a rabbit out of its hat again. Sailor might do that. But again, the everything I've talked about, I don't want to go off on a tangent. I've shared my fundamental thoughts on Bitcoin and also what's going to happen. All I can tell you, it still has positive divergence. So we are, and we're still holding that, give or take that 58,628-ish support, right? We're right there. So there's still the potential for Bitcoin to rally. But again, I think the market and investors are starting to lose confidence in strategy. Sailor took what was already a leveraged instrument strategy and then just juiced it up with that preferred dividend ETF based on that, kind of bring in, which by the way, just like a Ponzi scheme, no different from Madoff's thing, requires, you got to have new money coming in. You start getting withdrawals going out of that. It's already been priced down to 70 something cents on the dollar. Let's go to the MSTR. And so that's it. Just like Bitcoin, here, let me turn off this indicator. We don't need that percent above the 200 anymore. It's clinging to that positive divergence by the skin of its teeth. And you have a downtrend line. So it could take off. It could run. And if it does, remember, if strategy rallies, Bitcoin will rally. If Bitcoin rallies, strategy will rally. This also could be a potential bear flag continuation pattern right here. So I wanted to point that out to you right now. And we may not know until next week, but you have a very impulsive move down, resembles a flagpole with what appears to be a potential bear flag pattern. So what you need is a breakdown below the pattern, and then it would give you a measured target that would take you somewhere down here. I mean, that's off the bottom of my charts. It should take you down to T2. And that's it. So remember, strategy, unlike Bitcoin that's holding its previous low, strategy has taken that out. And strategy's problems are 110% Bitcoin's problem because they're the biggest holder of Bitcoin. And if they have problems and they have to sell and can't continue to buy, again, that's what kept Madoff going, or any Ponzi scheme, you look it up. As long as you have more money coming in than people taking out, it works great. Nobody knows. It's when you start to have more redemption, the money's not really there, and you don't have new money coming in. So if people are starting to worry about strategy, and there's certainly a lot of negative headlines hitting, then they're not getting new monies coming in. Therefore, and I know they have money in treasury. I know they have cash set aside to buy Bitcoin, but at some point, if it stops working, there's going to be an unwind. And my expectation, guys, if it goes this way, if it breaks above, I told you can have a stop above. You want a tight stop above that trend line or T1. We already hit T1. Remember, that was already hit. I keep you an update when it got hit. We're below it now. You can keep a tight stop or give it some room. I get a couple questions on there. I think there's one today on the site about it. Like I said, until the market breaks, until tech and semi really breaks, you have a risk on market. And it is possible that Bitcoin can break first and kind of then have a spiral effect, a domino effect on other things. But it's relatively holding up. Again, that's the same reason you look at, I just showed you Bitcoin, the actual crypto. Here's IBIT, which did make, looks very similar. You get that bullish falling wedge. There's a potential for a breakout here in Bitcoin. So I certainly wouldn't be aggressively short. And then to address again the use of the leverage ETF, which is MSTZ, I did a whole video a few months back on, there's 3 of them out there that I could find that are 2-time inverse, but this one tracked the best, had the best performance when Bitcoin went up or down. So it showed me they had best fee structure, the best tracking. And the problem with these leverage ETFs, especially in a volatile instrument that's grinding around and going away, that's where you get the decay. You want to be in them on a unidirectional run. This is when Bitcoin was falling. That will outperform. You'll do better than 2 times the drop in Bitcoin. But you need to be very selective. If you get in at these points, this is where you grind. When Bitcoin's going sideways, this is where the decay happens. So my point is, you can just do a straight short right now on Bitcoin if you believe it's going down. Manage your stops appropriately. Short IBIT or BRR, the Bitcoin futures. It's a big contract, so if your account size is kind of smaller, you can use MBT. It trades off the same levels. It just has a much smaller multiplier, meaning a smaller leverage factor. Again, that's MBT. Mike Bravo Tango is the symbol for the micro futures contract on Bitcoin. BRR is the big contract. And so if you're a futures trader, you can trade those long or short. Even if you have certain brokers like Interactive Brokers, they won't let you, even though I have margin IRA at Interactive Brokers where I can short futures. You're not allowed to short stocks, but you can short futures contracts, but not these guys. They won't let you do it there. These guys are about the only futures contract I've seen that they won't let you short. But of course, you can short them in a regular, non-IRA brokerage account. Okay, all right. So that's crypto. That's it. My thoughts where I think it's going to go. And again, this is where, I'm not a pure mechanical trader, but I'm watching this and I may flip to a long if this breaks out. You'd want to also see it get, this is IBIT, but again, your strategy has almost identical, that was our T1, 3568 there. That could certainly lead to a rally, and it would alleviate fears and strategy, right? So again, what's bullish for Bitcoin is bullish for strategy and vice versa. However, in a bear market, if this is what I suspect, that is my overriding factor. I haven't changed or waffled on that. If this is just a bear market with a lot more downside to come, then these divergences will get burned. They won't play out. They'll play out for either a little pop, false breakout, or they just don't play out at all. That's the nature of a bear market. Just like in a bull market, divergent highs are good usually for corrections, and you keep going up. And then eventually when they get big enough, and the charts indicate, and then of course you break a primary uptrend line, which was broken there, that's IBIT, then you enter a bear market. So right now, guys, we all have our opinions on everything in the market. Everyone has their opinion, but it's not debatable. That whether or not we're in a bear market. Bitcoin's trading right off a multi-year or 52-week low. So no matter who you are, you might argue where it's going to go. You might be bullish and saying, "Oh, this is the end of the bear market. We're about to start." But it's not a debatable topic whether the downtrend simply defined as a series of lower lows and lower highs, and that's all we are. So therefore, that puts a lower probability of this divergent low playing out for a move to new highs, like a divergent low in a bull market would be. So I just want to, and it increases the odds these divergences may be burned through. And that is my preferred scenario. Okay, moving on. TLT. I'm sorry I didn't lay out everything I was going to cover in the order. I guess you're figuring out now, but it'll be in the AI summary anyways. TLT I gave you recently as a either pure play long or a hedge. I gave you a total of 3 official targets with a potential 4th target. We hit 1, 2, 3. Told you, either I think back here, I took it. I didn't have enough confidence. I didn't want to hedge up anymore. When we got the sell signals on QQQ, I removed this indirect hedge. And then we went up and had a perfect tag, my T4. Again, that was created back on May 14th. And we hit that. And so far, it's been moving down. And that means interest rates are rising. Remember, TLT is the price, holds the 30-year bond. TYX is the yield on the 30-year bond. And let's not forget, because I like to remind everybody every day, that we are within what I call spitting distance of not a new high, not a new 52-week high, but a new multi-decade high in the yield on the 30-year bond, which will put the brakes on the stock market if it happens. So we have this pretty much turn off all the lines just in the last couple of years. We have a triple top. This is a very significant level, and that's when you look at it on the daily chart. But when you go back to all the way out to the monthly chart, this shows you these are that triple top. This is the last couple of years. I draw a straight line over, and as I've talked about, it would take us back to yield seen. This is the financial crisis. The stock market peaked in October of 2007, right about here. It ended, that bear market ended in March of 09, probably somewhere in there. So a breakout here is going to take yields to or above levels not seen since just before the financial crisis. And this was down here was your dot-com bubble that popped in March of 2000, and you had a bear market that went through about the middle of 2002, and that's also where yields were. So very, very technically significant, right? And it's where I think we'll probably go. And at some point, we'll break out, we'll probably put in a divergent high, then we'll come in and back test. So either way, guys, I don't have strong convictions in the near-term direction other than, we hit that 60-minute, final potential target. The potential target was, I never made it official, but that would have been and was the highest I thought treasuries would rally to, and we've since pulled back. So anyways, watch these because right now the market's taking it, especially the financials, with they're dismissive of it. But you can see I have resistance at 50, which means 5.0. That's the yield. If you move the decimal over, it's a 5% yield on the 30-year. We start popping above that, markets are going to start to worry. We take out those highs, the markets are going to start to freak out. If we can come down here and yields start dropping, especially if we drop over those recent lows, well, there's 2 scenarios there. It could be bullish or bearish. If it's doing that because the stock markets are taking on the chin, that's a flight to safety bid with institutions flocking in buying treasury bonds. If it's a natural, organic, or even forced by the treasury, manipulation of the to the best of their abilities, and they can bring rates down, then that should be net bullish for the equity markets. All right, long video, a couple more just throwing out. I mentioned BABA a few weeks back. It never took off, but it's starting to break out today. This is getting close to that. Remember, I gave you this long-term uptrend line here that said would be a good buy if it can get down there. Hasn't made it all the way there yet, but very, very close. And you have a very well-defined downtrend line. The stock just broke out today. So if you're looking for longs, BABA's an objective long entry here. Down to, but not below the uptrend line with a stop somewhat below it. Targets, I might have to sharpen my pencil a bit. Let me move this over here. I'll give you one other level I see about right here because I wanted to come in and capture this reaction low and all these lows right there. So you've got several targets if BABA can hold up. Probably going to take the U.S. markets and certainly the Chinese market holding up. What else looks good? I already went over the staples. If you missed the here, let me go back to my other posts. There were two of these that hit our price targets today. KHC, I think I got out to you this morning, and General Mills too. I've been on these multiple repeated. I've been covering these in videos. If you type on under the post, click on the ticker tag, you'll see all the coverage of GIS. And I believe most recently I pointed out this bullish falling wedge, and it broke out and it hit that first target today. So still, still a sector I like. These are what I call grandma stocks, grandma and grandpa. These are boring, steady Eddie, blue chip, dividend paying stocks, but I think the risk reward is infinitely more attractive than semis. So that doesn't mean if 6 months from now, Randy, you say, Randy, you said the risk reward was better, but semis are up another 50% and these guys are up 10. That's not risk reward. Risk reward ratio is the amount of risk you're taking. If the semis see a crowded rush to the exits and hit my downside targets from where we're at now of roughly 50% drop, that's a lot of loss. General Mills is very unlikely to drop 50%. This is very established, more steady business model. Nice, clean, steady dividend yielding 11%. What else do I have for you? The grains, I'll go into that in another video. I still very much like longer term and have for last year plus wheat, corn, soybeans, the grains, selective commodity. Oh, somebody asked me about, let me get to and then I'll wrap this video up. There was a question about, a couple questions, and one was about crude oil. I'm going to get to that here in a second here. So let me just answer all the questions, make sure I got them all for you guys. There was my follow-up post after I got the update on KHC out to you. I followed up with General Mills right when I hit that target, just to let you know that we'll also hit it if you wanted to book any profits or raise your stops. What's up with XLF? It doesn't make sense to me. Oh yeah, that's the other one. There was a lot of some irregularities in XLF today. Here, I'll show you real quick. It seems to be, it's across the board green. They're almost all green. Here's your components to XLF. But when I sort by what's driving this move, now nothing's changed much technically today, so it's an up move. But when I look at the big gainers, you look at the likes of Coinbase. These are contributing. Robinhood up almost 9%. Interactive Brokers, Brown Foreman. I think I highlighted this one as a long trade for you. It's insurance sector. I know I gave you Progressive recently. AJG. This is AJ Gallagher. So there's select stocks. Now this one just ran into the 200-day moving averages. I believe I covered it recently with the breakout of this bullish falling wedge. FTS. I just want to show you the big movers today in the sector, but a lot of them just ran into resistance, those that are moving big. FIS looks good right here. Look at that little breakout above the downtrend line, but here's a BOD or benefit of the doubt support level at about 41.37. That's your safe bet. Set alert. If it breaks that and the sector's holding up, you have first target 44.72 and then a second target zone from about 40, a little over 49 up to about 51. That's FIS. So I just wanted to show you what's going on there. But then on the flip side, I have and I'm kicking myself because I was going to get this out to you last week and I didn't. So I showed you Coinbase up, but I wanted to give you a short on Riot. I had an alert go off on this one earlier. I was away from my desk at the moment. It's already hit what probably would be my first target. Now we'll watch it. Too much to chase today. It's down 11%. And beautiful little divergent high on Riot. And it broke that trend line, back tested. And there's first support right there. But this one will most likely fall in line with Bitcoin and strategy, I would imagine. And again, it's just seen some irregularities in the financial sector. CME, we gamed this one like a grand piano that went long there, below on that overshoot there. We hit my second target. We got out, but I did a video right before it that I was longer term bearish. I give you long-term targets on the weekly chart. Let me get rid of that 40-week. And you go back and you can click on the ticker tag, and that's the 2251 level right there. I gave you that. We just hit that level. So that's a total so far of a 33% drop in the stock. So I wouldn't, definitely covered it. Hopefully you covered it there if you were in that one. And then the other one I gave you at the time that was kind of red flagging in the market was CBOE. So I gave you also long-term weekly chart levels. I think it's going, it hasn't yet hit my T1 level, very close. We also gamed that one. We threaded the needle going long right here on that trend line. I give you two price targets. We hit them quickly at the second and final one, made a quick 12%, got out. And then, as expected, the next leg down because I was near term bullish, just calling for a reflexive bounce when I highlighted them here that day, right here, but longer term bearish. And you can see it hit that 231.05 target slash support, and it's bounced so far. So right now I wouldn't touch them. I don't have a position. I don't have any, but what's going on here with these guys? I know somebody addressed it. There are some fundamental issues impacting them, but I'm seeing a lot of just disparity and diversion within the financial sector right now. Just like I just showed you in QQQ, it kind of meshes with my Hindenburg indicator, custom NASDAQ Hindenburg indicator that's been firing repeatedly. A big cluster of readings. It's a market crash indicator. And so I just want to keep that elevated market crash watch out there that I've issued. It's not a warning yet. It's a crash. I mean, it's a watch, which is less severe than a warning. But we'll keep on this. All right, guys. So that's it. Got a little of everything. I didn't have time to cover all the other food, consumer staples. And remember, I'm being very selective. I like a lot of the food processing companies, but not all of them. I might say processing of food packaging companies, and just miscellaneous stuff. The grains. Oh, somebody asked. Sorry, I didn't finish up. Somebody asked me about crude oil. XLF doesn't make sense. I just covered that. Staples might have a long way to go. Yep. Oh, thoughts on Nono and Lulu, Novo Nordisk, NVO. I gave you an update here. If you missed it, by the way, on all these things, you can use this search tool here. Let me shrink down here. Let me get this back. And oh no, I covered Novo in a video. Yeah, you just had Novo covered, and it might have been in this video right here, or the market summary. Where was it? I'll find it for you, or you can look it up. NVO highlighted recently. It was pushing against this resistance level here, walking up this uptrend line. It can be an objective long, a little bit below it. A little concerning now because we just ran into the 200-day moving averages and we have this negative divergence. So although I did mention it as a break above that level being bullish, I think I should have, if I didn't, I'll do it now, should have mentioned that the 200s were just above as well. So we're currently testing the 200-day exponential moving average, which capped it. Remember, we went long back here. We hit all 5 of my price targets. The second time we hit T5, we fell a little shy there and then a full hit there. And we also hit the 200, got rejected. So I'd like to see it clear the 200s, guys. That's what I'd like at this point in time. And then the other one you asked about was Lululemon. And it looks nice, but again, it's a stock in a bear market. We've had a few counter trend plays here. I give you price targets. T1 was hit, and then it went lower. We never hit T2 or 3. We might have bounced it again there. So this is a great example of a stock that peaked here. That was the end of its bull run, right? There's no arguing that. The stock is down right now. It just, the other day, it was down as much as 80%. Put in a divergent low, and it had a rally, but it was a bear market rally. Fell shy of the previous highs. Put in a divergent high at the end there. And sometimes my lines just disappear, and I'll add them back. And that's it. So there's an example, and we went long on that divergent low. We hit our first target, but never made it to the other 2 official targets. Put in another divergent low, another counter trend bounce. And you look at where it's going. So this is bear market action. We're just getting rejected. We have, we're setting up again for another bear market rally. Yeah, looks better. I like bottoming plays, especially blue chips. I don't know if you call it a blue chip company, but close to it. It's an established retailer. They make women's and men's clothes now, from what I understand, and It's brand. So it'll pop, and if it pops, sooner or later it'll pop. Have a bear market rally. 136.36 and the intersecting downtrend line. These are your first targets, and then maybe call it back for another test of the 200-day moving averages. But you got to break this trend line first. That downtrend line right there. This one, the minor downtrend line. So you have a little bullish falling wedge, positive divergences right there. And at this point in time, is it a bottoming play, meaning new bull market to come, new all-time highs? No, I can't. If it is, I don't see it in the charts. But I do have a weekly chart, and it's that long-term weekly support too, right there. Primary uptrend line and price support. So dual support, positive divergence. So yeah, I like this one. If it goes lower, I'll still like it even better at 80.50, especially if these divergences remain intact. But we may never get there. Probably bounce first, ultimately get down there. Okay, long video. I already addressed this earlier. Strategy, yes, it's still an active short trade. Yes, I still have a total of 4 price targets and expecting kind of doomsday type crap coming their way. But don't get married to it, Mike. Don't get married to it, and watch out with that leveraged version. You don't need a lot. If I'm right on, remember, if I'm right on my call on strategy, remember, we've had multiple trades. We shorted it here, hit our first 2 targets, and T3 where we covered everything. We gamed it back long, then we hit some downside targets there. Then I reversed it here. We hit that was a third and final target zone. Bounced it, sidestepped that give back. I canceled those 2 targets, but then we shorted it again. We've made on the even the official trades. It's also been covered in many videos as unofficial trades. Infinitely more than the stock has risen or fallen in the last couple of years. Just kind of swinging it. Now, with that being said, if this 4th target's hit, it's going to be a drop from. We had multiple objective shorting points in this range right here recently on this current trade. I'm going to just measure from there. That's going to be about a 91% drop. Do you need to use a leverage ETF to, profit it? If we get to the point where I think I've seen the semis clearly, we've gotten a sell signal, but I see more technical evidence to get aggressively short the semis and the stock market. I see the financials break, and I see Bitcoin starting to unwind, or I think we're there. Yeah, then at that point you put it in, and you will, instead of making 90% on a short trade, you'll make 100. It's several times that on being long MSTZ. It's just right now, I don't know if we're there yet. Let's see if we break this potential bear flag pattern next week. That would be a start, or maybe later this week. And then finally, I know a very long video, guys. I'm just wanted to cover a lot I haven't done. I've been working on the back end of the site all week, programmers, developers, doing things, updating a lot of stuff. Somebody asked, is my take on US and CL hitting new lows, still expecting a bounce here? Yes, I am. Let me show you the chart, and then a quick I'll show you my last comments. So that's not it. This is the CL I gave you here. I highlight it right here, and there was the breakout of the bullish falling wedge. We made a marginal new and still divergent low. But remember my comments, and if you didn't see them, I'll show you how to find them. Just search here, go to CL. Somebody asked recently, these are homepage posts. Will come up first. Scroll down to post comments. That's your post today asking. So this is my 2 previous ones here. So somebody asked about it'll automatically load to it. Just a few days ago. Hey, great call. And they had just broken out. And so my reply was, look, no high fives yet until at least it's my first price target. I've never learned to pat myself on the back. If I told you how many times I've had a trade that was ripping within spitting distance of hitting my price target and then reverse, and all the gains evaporate, it happens. So I don't get excited till price targets hit. But either way, I said CL broke out above that bullish falling wedge today. So far, so good. But if I had a nickel for every trade that started to play out but then crapped out, well, okay. So And here's what the takeaway is: look, I'm holding it now, but nothing too heavy. As volatility and uncertainty is just too high to bet crude hard either way right now. Remember what I said long before the strait was open, and it's been open, close, open, close, open, close. Trump taco, taco this, taco. It's every Friday is something happens bad, and then somebody predicted last week on the site he would taco. Sure enough, he did. On Sunday. Here's my point. But what I said is there's going to be oil sloshing everywhere. It's going to be spilling all over onto the shores of, into the strait and everywhere out in the Middle East because it was shut down for so long on all that production from all those wells and the oil that moves through there. So it's, hitting the markets. So there's a lot of cross currents right now. All I'm trying to say is, look, the technical setup is there. I just gave you the updated chart. We still have the divergence low. We're still on, it's not great, but it's decent support. So yeah, I still like it. Still have a small long position, but that's all it is. I'm not getting married. Crude's just been too volatile. There's too much unpredictable, we'll call it Trump noise, if you want to call it that. His latest whim. Plus, it's Iran too. Uh, we keep saying, the Trump administration keeps saying, oh yeah, we reached a deal. And Iran's saying, no, that's bullshit. So there's a lot of disconnect between what we're saying things are going well and what they're doing. And then, of course, Israel, even though that's the wild card there, we may have reached a deal with the Republican National Guard or whoever it is. And then Israel decides to launch an attack, and then Iran retaliates and blows something up or shuts the strait down. So you've got that kind of just very unpredictable, volatile situation there. So if you're going to take crude, just don't, there's no reason to put a lot in it or move on, pass. There's some other things out there. But to answer the question, yeah, look, it still broke out. Some things break out and run straight up. Sometimes you break out and you go down a little, you back test, and then you run. That's all. If it goes much lower, I can tell you right now, there's some good support down around this area here. There's a gap right there, but that about 60.50. That would be a big drop in crude, I'll tell you. But it's possible. All right, let me wrap the video up here. It's been a long one, guys. And again, I'll try to get a summary out with it so you can skip ahead to whatever topic you want to hear. And yeah, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.